This is just AMZN on Friday, September 27th, 2019. Well, the lines are working really well again. We had an open right at 1747, high wave candle, broke down from there, slammed right into 1727.80, looked to bounce and barely touched the lower wick of the opening candle, touched it here, went and rolled over, came right back up, made a really nice double bottom, and really, as it came right back up here, getting into puts, I mean, it flashed down. This was an incredibly quick move here, and then another quick wick up that rolled back over. There were a couple opportunities right around this where you could have been getting into puts very inexpensively and looking for a rollover, but getting a flash. I mean, 5 minutes later, and you're up huge. So we'll look at what the options did there. But look at where we bounced. We bounced here once, twice, and then this time we broke through nicely, retested with an inverted hammer, had a nice bearish candle that broke down below that, and then just sideways and grinded lower, and had a really nice bounce off of our next line at 1714.50. And the low of this candle was actually 1714.66, just 16 cents above. We pushed below this price by less than $1, had a nice bounce. And again, where did we bounce to? We bounced right back up to 1727.80. I mean, the high was 1727.64. Yet again, 16 cents off the line. I don't know how that happens, but I guess they're really good lines, or they're just really bad and they're 16 cents off the low of this candle and the high of this candle, both bullish candles. So just pretty interesting how that worked out into the kind of the last hour and a half of the day. Really nice bounce down here. As this was just grinding lower, it's like, man, at some point I just feel like there's going to be a nice big bounce. And I thought it was going to happen here. It was going to just run up and take out anyone who had been shorting. But no, it ran up, rolled over off the 21, and then got a nice push. And these are the nice ones where it pushes nicely through the 21 moving average. I'm sorry, exponential moving average on the 5-minute. Pulls back slightly. Sometimes it'll touch it, and then it'll just continue to bounce. And this is the one where, and let's see, can I move this? Can I just zoom in? There, the low is in the way a little bit. Sorry. You have a nice volume. Picked up the volume from the bearish candle. Nice volume up, pulled back. Even pulled back in this candle. I didn't realize that. Pulled back in this candle too. And you could have been getting into options here with very small risk, just because you pushed through the 21. Now the 21 is acting as support, as is this pivot, and that's right where you bounced. Both of these candles bounced there. And again, a quick move in 5 minutes, so we can look at what the calls were doing right here. And this is something I'm working on getting better at, is how to trade the last few minutes of the last hour on expiration Friday, because you can make multiple times your risk very easily, very quickly, but you can also lose it almost instantly. So if you're going bearish right here, and I'm not sure why, other than maybe you missed the entry going bearish here and here and here, but something changed, it shifted. And so if you're going bearish here, it's the wrong direction. So you get the direction right, you can have a quick move, and you can also just watch it go sideways the rest of the day and it doesn't do anything. And I've been plenty of those too. So anyway, back to what happened today. Let's look at the puts. So right at the open, you had a risk of about $1 that you could have been trading this. The range on this was a little more than $1, but if you waited after the first 5 minutes, took the breakout, you really could have been in this just about 2 by 1. And I mean, even lower than that, 150 by 50, something like that. And that ran up to 6 as it was breaking down into this low. So on basically the low of this candle at 855 is where you could have been exiting the put. So at 855, yep, could have been exiting right there. Let's see, the high was right at 6, just under 6. So let's say you got in 2, stopped out at 1, exited at 6. If not on this candle, maybe 550 or 5. Let's call 5. Okay, you're in at 2 out of 5. 3R in like 20 minutes. go for it, do that. Okay, moving on to the next trade. Um, this was where the risk got really small. The candles got really small. The risk was under $1, and from here it really just flashed. So hang on just a minute. I need to pause. Okay, sorry, should be back now with the recording. All right, so I think I was talking about getting in just, a really nice risk, $1. Absolute zero play where you risk the entire dollar, you buy at $1, and if you were watching it, you could have been exiting up here as it spiked up to 6, or if you weren't as quick, maybe 5 as it got back up here, and you set that as your target, or maybe you just said, okay, here's the entry, here's the stop, well, no stop. Entry at 1, stop at 0, no stop essentially, and I'm going to get out at 3 if it gets up there. And you just have that set. And you probably get a really nice fill if you had a target at 3. You probably got fill at like 350 or 4, depending on how quickly that went. It looks like it almost came down to $1 right here. And had you not been watching or didn't have a target set and then saw it pull back here, you probably moved your stop up to $1 to lock in, break even, which is always a challenge when it's options because the price kind of flutters around a bit. But it got going again, and it broke through. 1725, got in the money quite a bit. Got down to 1713 and change, and that was where it pushed way up. Oops. That's where it pushed way up here around $10. So let's say you bought at 10. I'm sorry, bought at $1 and got out at $10. That's 9R. That's a 9R gain. Had you waited on that. Now, what reason would you have had to wait to get out here? Maybe that it was just going to grind down to our next target, and it did. And you had your target at $1 or at $10 because it's about $10 in the money. 1714.50 is $10 in the money from 1725. The price should hit $10. That's just how options work, and that would have worked. Now let's say right down here you're buying calls. You're buying the 1725 call, and if it gets back up to this target, well, however much this is, you're almost $3 in the money here. So let's look at 1725 calls. You're buying on those lows. You probably didn't get the exact low. You probably bought at like 50 cents. Maybe you got 2 of them for 50 cents. So that's $1. And those run up to 365. So you probably didn't get out right at 365. You probably had a target set at $3 because if it gets back up there, you can get out at 3. And if it goes a little further, great. But you got out at 3. You still made the trade. So getting in 2 of these at 50, getting out both at $3, that's from you're essentially spending $1 and you're making $6. So that's a 5R gain. That worked nicely there too. This is buying at 205, the last hour of the day, really. Buying at 205 and you're out at 230, or by 235 you're out. So you're in that for half an hour and you make 5R. I mean, that's a great setup, a great trade. This you were in going from $1 to $5, so that was, a 4-hour gain in 5 minutes. I always like those better, but they're not as predictable or not as noticeable that it's going to move like that. Now, had you just held it and gotten out at the next target here, that would have been, well, I guess the next target was technically 1727.80 because you were getting in up here and it hit that, but then the next target was down here, and I mean, it didn't have to get there today. It once it broke through here, it made sense that was the next place we go, but it didn't have to get there today. So had you held through all that, you would have made 9R over the course of, let's see, what was this, from 10:30 all the way to almost 2 o'clock. So you're holding that for 3.5 hours. And do you want 4R in 5 minutes, or do you want 9R over for 3.5 hours? Probably be good with 4R in 5 minutes, and then just go about your day and not have to worry, not have to think about it. Not worry. We don't have to worry. We got our stop set. Absolute zero. Nothing to worry about. It's just you start to worry did I miss taking profit here? Or should I have gotten out? Well, you should have gotten out here, definitely. And then you reload up here and you get in, and maybe it doesn't get back to a dollar, but you just made 4R. So you get in, if it spikes up like this, it's like, okay, a dollar doesn't fill. I'm going to get in at 150 if I can, and sure enough, it comes down to 150 and you got it set up 150 by 50 because it didn't even get down to 50 here. So that's safe, you know. This was the low. This was that spike. It's not going to retrace down to the 69 cents, anytime soon when it's doing this kind of pullback. If it does spike past, or if it does move past, it may still hold that value just because the market makers aren't going to give the price up that easily because it looks like it's going to roll back down. Now, in this case, it put in um, a nice upper wick right here and roll back down. But even here, the price was $1.27 at this high on that option. So it was $1 here, $1.02 here, and $1.27 here. It's showing, hey, it's not giving all that premium back. It's not letting it drop out. It looks like it's going to roll over, and you got to pay up a little bit more than $1. You got to pay up a little bit more than $1.02. You got to pay up a little bit more than $1.27 to get into this to be able to be in the move. But these are great places to not chase, and that's something I've had to learn too. I'm chasing this if I'm getting in here thinking, oh, it's going to continue. You want a little bit of a retracement because someone's going to be taking profit here, on the stock. And the option, you're going to get back a lot of that profit because it's just how the option works. It's going to lose that premium as quickly as it can because on a Friday, it's trying to get to zero. All the out of the money options are trying to get to zero. So in this case, we moved very quickly in the direction of getting at the money. So it's going to spike up. And then as it retraces some, it's trying to give all the premium back up. Then we're in the money again over here. And now we're just kind of hovering around. So here you could have been looking at buying any of these lows. I mean, look at this. We put in a low here, 458, 5, right at 5, 512, 515, 520, 545. You could have been buying anywhere below 550 and a stop at 450 and just riding that, flipping that out, from 550 up to 650, 750. In some cases 850, this one, but it would have been a nice 2R gain. All of these worked, buying at 550, flipping it out at 750 for 2R. Let's count this one. Once, twice, 3 times, 4 times, 5 times. 5 times in a row. That's 2, 4, 6, 8, 10R. Just doing that same trade right as we're moving around right at the money. So this was 1155 was the first one that was going on here. There's this. So as this was moving away from 1725 into the money, the slope here, each one of these upper wicks pulled right back into the 550 or under the 550 price on the option. Even though we're going in the money more, the low kept steady right between 5 and 550 on these. Got down to 458 on this one, or something like that. 458. 458, yeah. But the other ones, all the other ones, it was over 5, which was great. You could have been buying 550 by 450. And it didn't even touch the 21. Had it touched the 21, that would have been a great place to just buy right there, just like this one was. This price at 205 was 205. That was over here. Oh wow, that was buying at 623. So probably didn't get that one. Maybe, but it still made 2R. If you bought 650 by 550 over here, it made 2R within that same candle. And you're out. And good thing, because you would have been stopped out very shortly after that. But anyway, it's just a matter of understanding what's happening, how are things moving, and this is just one of those that it's hard to not look for that and not trade it when it's doing something. It's just handing that price to you. as it's doing this, and you're not going to get that on the stock. You're not going to get that move on the stock and be able to make that. I mean, you could do that over and over and over, but you're going to make a couple bucks at a time based on how many shares you got. You know, you got maybe $2, $4 per share. You gotta have a lot of shares to make that work, as opposed to buy, whatever your risk is, 550 by 450, and do it, flip it, and do it each time. And one of them, maybe you want to watch for, a 3R target, and that would have worked 1, 2, 3, 4 times. This time would not have worked, but you would have still been in here. It didn't stop you out. So 4 times you could have had 3R, or 5 times you would have 2R. It's actually better to have 3R 4 times. It turns out to be 12R. And then this one didn't quite get to 3. So, yeah, interesting stuff. So let's get back over to this. We talked about that rollover. We talked through that one. We talked through the puts. Did we talk through the call? Yeah, we went through all this stuff. All right, back up to the daily. I didn't refresh this. I had to reboot and didn't refresh this. Okay, this, what we got, I had on the screen. What we got right here looks like we're breaking down from a neckline, from a very large head and shoulders. I drew it the other day. It seems to be happening now. So let's go with this color. Let's see what happens. You see that? This is one of those where it's just this kind of range bound, shallower shoulder that does not get anywhere nearly as large as the other shoulder. This is half the distance here. So this one, it's about half, if that. So right now, though, this is starting to be a breakdown. We are below this. I was going to say like armpit because it's head and shoulders. So we're below this, and we're starting to break down. Sorry, I'm just drawing all of this thing. All right, we're starting to break down. We have almost gotten a close below this wick. Doesn't necessarily have to have a close below the wick to show that we're going down. We're going down. Had a really nice bounce today off of this line. We've bounced there before. We bounced there going up on, on this rally. We don't have to bounce here. This looks like it's doing the opposite of this. We're breaking down, and we should come down to 1600. I have a X marks the spot that has Monday's date at the 16, what price is this? 1617.54 price. I don't know that we're going to get there, but if we do, that's a really, really bearish monthly candle for September, because September started out right here. We would have a really nice upper wick. So from here up will be the upper wick, and then you got some body down here. But what if we get way down here? That's a really strong monthly candle. Let's look at the monthly candle real quick. Let's see what this looks like right now. Yeah, that looks kind of bearish. I mean, it's been pulling back. So this is 3 months in a row of bearish candles. Monday's the last chance to do something else about it. It makes sense to pull back to the low that this one had here and see what we do at that price. The low here was 1672. So yeah, that's possible. 1672, 1665.27, something like that. I don't know that we're going to get there Monday, but we have the 21 exponential coming up. After that, we have a squeeze forming the last month and this month, so that could take a number of hours just to form, and then I think we're ultimately going higher. But this looks like a really massive triangle: lower highs, higher lows. It's just going to take a lot of time to play out. Oops, I want to go to the weekly. So on a weekly, what's going on a weekly? This looks like a double top with just indecision right here. It looked like it was going to break out. Now it's breaking down. You have a nice weekly gap. This is a Unison reversal. Yeah, I like this bearish too. This is a really nice hammer. And we're breaking down. Don't have similar volume to that bullishness yet. We're still in an uptrend. This is really showing us that we're breaking down from what you could have drawn as a trend line here. And I think that's what fits with that the line that I found. So it's hard to see here. Let me go back to the intraday because I have extended hours. Go back to the 4 hour and see how this works. So if this is all lined up right, you know, it looks like we've totally broken down from that line. We could get a nice big rally retest up into, I guess we could get back up into 1747 again, or maybe 17. What was it? 17. What's our next price? Not that one. 1747. I think it was just 1781 was the 50% mark between these two. We could get a rally up into that. People would be buying thinking it's going to be a big double bottom, and then it's not. It rolls back down. But it's already showing that it looks like it's continuing lower. So that was that line. Let's see if we see anything in the hourly. Yeah, this was a nice flag. Look at that. This breakdown from up here on these highs, breakdown, a really massive flag, and now we're rolling over. We did have a head and shoulders here, and again, a shallower right shoulder, breakdown, retested that neckline, and now we're lower. And we should continue ways. If you do a measured move on this, it should be just about done. So if you go from, it's called 1800 up to 1855, then that'd be down to 1745 would be a measured move, and we're past that. So there's more bearishness that's come in. It's like it should have held the 1747 pivot if it was going to be a measured move from this head and shoulders, and it's not. It's below that now, so it looks like it should continue. It's harder to draw any sort of triangle on this because it looks like a flag. So it made some lower or relative lows at first, and it made relative highs. It's made higher lows until this point that it broke down and retested back into that low, and now we're going lower. Everything on here says to me we're going lower. The only thing that would change that would be some sort of gap above both of these almost shaved top candles. I mean, we were within $1 of the high. The open and the high are less than $1 apart yesterday. The open and the high are a little more than $1 apart today. So that would trap a lot of bears if we can get a gap up and open above that. I think even still, if that happens, a lot of bears would be thinking, oh, here's another chance to get in bearish and initially actually fade. And then if it can hold a key level, then you could see some buying. So that would probably be holding 1747 and see some buying come back in. That's if we get a gap up into this area. And I'm giving a really small area here. If we do it up here, I think it has the potential to hold, at least hold 1747. If we gap way up here, I think that's going to fade all day long down to 1747. That's going to look even more bearish. At that point, any of the bulls that bought are going to be getting out, which is going to help it sell off. And that may still come down to 1747, but it's just a matter of time before it has a nice little retracement and then a rollover. But I think that's what we've already gotten in terms of, if you look at this candle with this one and this one, if you kind of squash those three candles, you got a bearish move that opened here, closed here, and now, you know, it kind of retraced a bit, but it's moved lower. I think you can do that. Like if I had like a 3-day, which there's ways to look at candles like that. Add time frame, daily, go up to 20 years, 3-day. So I do a 3-day. I'll just move it in order. 3-day. Okay. Well, and I think I just have to select it. 3-day. See if it merges the candle for us. Yeah, there it is. All right, cool. That worked. That's a merged candle of those. So that's a 3-day candle that merged the one bearish candle, the retracement candle, and then the next bearish candle. So looking at this, look at the bookends on these days, trying to go bullish. Nice low here, broke down on that. We retraced these 3 days, couldn't even get back up there, and we're lower. But we've closed below all these lows. Kind of like that 3-day. That's interesting. Obviously, it changes everything else that's going on in the chart. But man, clearly broken down here. So what does the next 3 days hold? More bearishness, it looks like. I mean, this is just 2 days in a row after taking out a really key level that was there for, 12 days, essentially, those lows. Where have we done that kind of thing before? It's just unique to look at a 3-day chart. I like the merge candles, though. That's pretty cool. So let's try that again sometime. Here's a place where we took out a low. We had a couple of candles, had that bullish one, had a couple of bearish ones, took out that low very quickly, and then from there we were bouncing. That was more so a retracement of this. Granted, we're still above that. That's what I'm saying. If we come down to 1665, 27, if we come down there, that's a great place to bounce because it's essentially bouncing out of this consolidation. It would be a double top, a massive one. It's even cleaner to see this as a double top. But it doesn't necessarily have to bounce there. It looks like it should, but it doesn't have to. You could get a bounce, you get a candle like this, where it bounces, runs up, and rolls back down. So you get that. If it comes down, bounces, touches the 5, touches the 21, rolls back down. You could do that too. So, all right, let's get out of the 3-day before it hurts our heads. But, play around with the chart. Look at different things. It helps you see different things. I don't really do this too much, but if you put a minus in front, it flips everything. And all the lines are going to be on. But, if you are used to looking at a bullish chart and you look at this and it's like, oh man, this is totally breaking out. It's going, man, I should buy any dip. Well, hey, you just flip the chart. These are all negative prices. You're looking at negative Amazon. If this looks incredibly bullish to you, that means it's actually, Amazon is actually incredibly bearish looking. And we just flip the chart back. That means this looks like it's about to go. It's about to run bearish. And so let's look for places to short the rally. Let's look for places that we can mitigate risk. We've moved into this range now, this smaller range where we've got a lot more lines. That's just some framing to help us trade that, but it should break into the next area soon. And the next area is going to be this no man's land here. The next target is 1665.27. The next one after that is 1617.54. And then there's one more, 1607. And then we're into the 1500s. If you step out a little bit, if we don't get to, too far. Let's see. I'm trying to do it in a way that I can show this. Okay, I need that low. Okay, if we can get to this one Monday, we could get to this one on the 2nd of October. We can get to this one on the 8th of October. We can get to this one on the 11th of October. This downtrend line, I mean, it doesn't have the best fit here, but it has a framework that carries back from this previous set. We didn't hit it here. We were actually a little ways off of it. We're about that far away. No, we're further away. We've got some room to come down to this and still be far enough away that it would match kind of what happened here. And it just means I don't have the right spacing, but these can still be X marks the spots. And we'll look for these as targets as these days play out. And when we don't get to them, to see, is there a potential to get to those? The first one was here, was this range. This did work really well, especially here and here. That's how we drew it. And then it just didn't, it showed the resistance, but it didn't show support as well. This one was just the same spacing as each of the others. And it didn't really hit anything. It kind of hit here and framed out some range for a little bit until we just went sideways more. And I don't know if this is totally broken down now. I don't want to take it off until I know for sure that it has. But until it shows that it's not going to interact with these prices, and again, it didn't here, but it did here. Until it shows it's not going to interact with this price, I'm going to leave it on here and say, okay, I'm going to call that a target. It corresponds to some key levels we have in this range. What's going to happen here? It's a good place to look for it. So anyway, that's what's going through my mind for how this is setting up. Granted, I could be totally wrong. We could rally out of here and have a really nice bounce. It'd be great to do that. I'll be looking for some bullish trades then. In the meantime, if we have some continuation lower, I'll be looking for some bearish trades. If we go sideways, I think we'll consolidate for a little bit and then continue in the direction of this trend. And the shorter term trend is bearish. The longer term, obviously bullish, but shorter term, if we go sideways into next week, I think we'll ultimately break down and get into the 1600s. I think it will happen sooner rather than later. So anyway, that's what I got. Hope this helps. And yeah, hope you got some of these lines on your charts too. Thanks. This is just Sam again.